Alright everyone, Marco Palmera, founder of Ulysses in Dubai, and welcome to another episode of Acquisition Case Studies, where we take deals that we've sourced and negotiated in the past, we break them down, we analyze them, we find lessons and mistakes that we've made so that we can execute better deals in the United Arab Emirates and in the Middle East. As always, we focus on our proprietary deal flow at Ulysses, and these videos are addressed to all the business executives, entrepreneurs, and investors looking to buy companies in the UAE and Middle East. In this video, we talk about a very interesting case which kind of showed me how some business operations work in the United Arab Emirates and in the Middle East, what kind of clientele they serve, how the business itself has been structured, and what are some of the challenges of taking over these operations. So before we actually dive into this and the takeaways for the case, let me give you a little background on it. We were talking about a company that had been around for about 20 years, so a fairly established business in the country. The staff was only 15 people, out of which 3 of them, let's say 3/4, were the key producers. So that was already a bit of a red flag for us because the key producers were a limited number of people. Real estate was not involved, so we were talking about a pure business acquisition. And the motivation for the sale was that the owner was getting old. He wanted to potentially transition out of business ownership, but at the same time, he had embarked on a venture to expand that place, and he was stuck with that project, so he needed to continue that expansion because he wanted to continue it. But at the same time, he didn't want to be involved in the business operations. He just wanted to become a consultant, do everything that he was doing to serve the clients, but not be involved in the executional part and the management part of the business. So we sat down with him, and I was a bit skeptical about the business in the first place because, as I said to you, there were just 2-3 key producers in the business, which kind of told me that these guys were actually driving most of the revenue, and they were the ones that people were going to get their service or products. So fundamentally, they were the brand, and that was a little bit of a concern for me. In this case, we were talking about a service-based business, so there was little to no products involved, although they had some product line. So really, all the competence and the reputation of the business was with the individuals. So I was a little bit concerned about it, but I said, okay, let's look into it and see if there's something that can be done there. Now, in terms of revenue breakdown, I'm going to give you the financial picture of the business, which was kind of weird because the company was generating about $4.5 million a year in revenue, in only a net profit of about 160,000. So very low profitability, and for the business of that kind, it looked very unrealistic, to be frank with you, and I'm going to tell you the reasons in a second. Fundamentally, the business was serving a community of very wealthy individuals. So all the services that we're providing were targeting a clientele that was willing to pay top dollars for these services. And to me, it appeared very strange that a business that was organized to do low volume but high price could be, profiting so little, right? And I felt there was something going on in that business that wasn't, necessarily explained. And as we dig a little bit deeper and we looked at the financial performance of the business, funny enough, we realized the owner of the company was paying himself a salary of, of about $1.5 million per year. So fundamentally, the business was generating 1.5 plus 160,000 is 1.6 million in net every single year. So it was profiting around 40% net, right, and bottom line, which was exceptional. But the guy had, put his compensation as a salary, not as a dividend. So it was consolidated under the other salaries of the company, and we couldn't see that at an initial analysis, when we asked them for the summary of the financials, we could only see that after they shared the full audit of the business. And so I was like, okay, that makes a little bit more sense, because it appeared to be a very, very profitable organization. But the challenge that I saw in that business, and part of that is associated with these types of compensation packages, was that, well, first of all, the guy was the business. So the other 2-3 key producers I mentioned were not really contributing much to the generation of that revenue. The guy was the one doing most of the work, and the one that was leveraging the reputation to get people through the door. In terms of the clientele that we're serving, I told you before, we were talking about a high net worth, ultra high net worth type of clientele, which generally is quite concerned about the people they're interacting with. As a consequence, our perspective was these guys are going to trust the person a lot. They might not trust other people as, we transition the business. And despite the fact the guy told us that he wanted to stay in the business, these type of clientele might not be very receptive to having new ownership stepping in. And so that was a little bit of a concern to me. And I think, taking a step back before I continue my discussion and my analysis on the deal, this is a reality that not a lot of places, you cannot encounter in a lot of places, because UAE and Dubai have a high concentration of wealthy individuals, and some businesses in all sectors are structured to serve this type of clientele. And the concentration of that clientele is huge in this particular country. In other places, you might still see similar things, but it's not going to be as heavily concentrated as it is in the United Arab Emirates, based on my experience. And so, different market dynamics are created there, where you really need to understand how this type of business that is serving a very tiny portion of the clientele, how these businesses really work. Do they operate similarly to others, or they don't? In most cases, they don't. And so the point I'm getting at here is that there's a high level of competence and expertise needed to oversee these operations. And based on my perspective, these might not necessarily be the best acquisition targets, because unless you have that level of competence, then they become much difficult to manage, and also more difficult to oversee passively. So you cannot have somebody else oversee the operation on your behalf. And that was exactly one of the problems that came out. As I mentioned to you, one of the guys was the key man, the one running the show and building up the reputation of the place, and talking with most of the clientele. He said to us that he was willing to stay as a consultant, and that was fine. But the problem was, would that clientele be receptive to this person becoming a normal consultant? And in addition to that, would we be okay of having a business that is strictly reliant on that person? Because if that person changes his mind one day out of the other, we're completely, screwed, because the guy can do whatever he wants. Most of the business depends on him. There's very little that we can do, because even if we find somebody that is as experienced as he is in that particular business line, that type of clientele will not be receptive to transition to another person, because maybe they trust the guy, maybe they like the guy, maybe they're just used to the guy and they don't want to get rid of him. And in that particular case, losing clients that were willing to pay top dollars for these services might have been a huge mistake, and not necessarily something that was beneficial for the business, because, as I said, the company was working on low volume, high pricing. So all these considerations made me feel like that was not the ideal business to acquire, despite the fact, the profitability was huge. And one of the other issues, and I'm getting to the profitability issue here, is that, there was a high level of profitability, but the guy was paying himself most of that profit out as, not as a dividend, as a salary in this case, because there are no taxation on salaries here, so you can do basically whatever you want in the UAE. But the point is, he wasn't willing to change that salary after the sale. So what he fundamentally said was, well, I'll sell the business, you can run it. I will be willing to maybe reduce my salary down to X, but I'm not gonna take a 80% pay cut, something like that. And that was a big issue because that would have been the first thing that we would do, because of course it was completely bonkers. I mean, a business that is generating 4 million a year, you're paying yourself 1.6. That's there's something that doesn't add up really. And so that was one of the major deal breakers. But I think the most important lesson that I took away from this deal was that there are certain dynamics when buying small businesses in the UAE, in Saudi, and in Oman, where you will find operations that are serving specific communities that might have very particular types of needs, and there might, extra level of expertise might be needed, but also a sort of interpersonal relationship might be needed to be successful at these businesses. And those are not really the companies I would feel comfortable in acquiring, because they're going to be strictly relying on the person. In addition to that, there some kind of trust and competence that you cannot buy and you cannot acquire by transitioning that business. So independently of how good you are, you might be even better than that person. You're not going to be able to do as good as the job simply because these clients are already accustomed to going to this person. It's I don't want to say it's sort of like a consulting business, but it's very similar, right? So what I've learned, at least looking at these types of deals, was that if there are all these red flags where a lot of things are surrounding the owner and they are strictly associated to one person, then I don't want to move forward independently of how good the business is. And yeah, again, the business was good, but no way for us to get involved and manage it with our own expertise. So that was a bit of a takeaway from this acquisition. I hope you find it helpful, and I will see you in the next one.